What is fiat currency? Government-produced currency known as fiat money is not backed by a tangible good like gold or silver, but rather by the government that created it. Instead of being backed by the value of a commodity, fiat money derives its value from the interplay between supply and demand as well as the stability of the government that issues it. The majority of contemporary paper currencies, including the US dollar, the euro, and other significant world currencies, are fiat currencies. Knowing fiat currency. Fiat is a Latin word that is frequently translated as, "let it be done," or, "it shall be." Fiat money is therefore useless in and of itself. It only has value when the government upholds it. Governments used to issue paper money that could be redeemed for a predetermined amount of physical commodities or make coins out of valued physical commodities, such gold or silver. These practices gave rise to fiat currency. But because there is no underlying asset supporting fiat, it is not convertible and cannot be redeemed. Fiat money runs the danger of depreciating in value owing to inflation or possibly losing all of its value in the case of hyperinflation because it is not backed by actual reserves like a national stockpile of gold or silver. The rate of inflation can double in a single day in some of the worst cases of hyperinflation, such as in Hungary soon following World War II. Furthermore, a country's currency will lose value if people stop believing in it. This is very dissimilar from a currency backed by gold, for instance. A currency backed by gold has intrinsic value since gold is valued for jewelry and decorative purposes as well as for usage in the production of electronics, computers, and aeronautical vehicles. Fiat currency has both advantages and disadvantages. If fiat money can perform the functions that a country's economy requires of its monetary unit, storing value, offering a numerical account, and enabling exchange, it is a good currency. It also has great seigniorage, which means that producing it is less expensive than producing a currency that is directly linked to a commodity. Governments and central banks attempted to protect their economies from the worst effects of the natural booms and busts of the business cycle, which is in part why fiat currencies rose to popularity in the 20th century. Central banks are better equipped to handle economic factors including credit supply, liquidity, interest rates, and money velocity since fiat money has a lot more supply control than precious metals like gold do. For instance, the U.S. Federal Reserve has a dual responsibility to control inflation and unemployment. Disadvantages. But the 2007 housing crisis and the ensuing financial collapse dimmed the idea that controlling the money supply by central banks would definitely avert depressions or severe recessions. Due to the scarcity of gold, a currency backed by it is, for instance, typically more stable than fiat money. With fiat money, there are more chances for bubbles to form due to its endless supply.